Yo, what's up you guys? Welcome back to another video. And today we are going to be speaking about the fact that the US just printed a 2.9 GDP number. Now, how is that even possible? Well, we don't know, but that is exactly what we are going to be finding out. If you are new here, please head over to the educational section where you will be basically understanding most of the wording that I'll be using right here. Now, without any further ado, please do consider smashing that subscribe button if you enjoy the video. And don't forget to smash that like button also for the YouTube algorithm. I help you, you help me, help someone else. Now, without any further ado, let's jump straight into the information. Says here, advanced GDP went up to 2.9%. So what does this mean? Firstly, it means that people are spending more, people are paying more tax, salary increases can be expected, and more jobs are being created. What I'm trying to tell you is that it means that the economy is doing good. Now, it comes with a salary increase as well. South Africa's GDP was up by 1.6% in December, and I'm still here waiting for my salary increase. I'm sure most of you are waiting for that as well. Now, let's just jump straight into the information, and I think this is kind of what technical information is about, that falls straight into the fundamental data, because I've not too long ago heard someone say that, sometimes the market moves but we don't know what it is. Well, I'll tell you, if you're watching this video, I'll tell you exactly what's moving the market. The best thing about technical analysis is that sometimes the market sits at a very good price just before the news comes out to give you that exact buying opportunity that you need. For instance, the market is currently sitting at a strong level of support. Next thing you know, the US is printing positive GDP while it was printing negative GDP for 3 times in a row last year, and then all of a sudden the US like, we got better GDP this week, apart from the inflation that indicates that people are now spending less, because that's how CPI data is supposed to come down in the first place. That says here, US GDP rose 2.9% in the fourth quarter, more than expected, even as people are scared. Investors are scared that there might be a possible recession. I've been saying this a long time ago, and the thing is, it's not about what it's not about what you say. Even the Feds was not going to come out and say, guys, recession is there. No, they're going to find the best method on how they can drag this, because the best thing they can do is just to pump more money into the market. The same money that you think you'd be able to take through a 0.01 on the Nasdaq, and think that you will be able to get the trillions that are being printed in the market as well. Now, let's just jump straight into the information. It says here, the gross domestic product rose, which is the GDP. Now, the GDP in simple terms is basically the health of the economy. Now, there's a good saying by Bill Clinton many years ago. He says that the way in which you measure the strength of a country's economy is to, the best way to measure the strength of a country's currency is to measure the strength of the economy. And we use the GDP to measure the strength. And at 2.9% based off the 2.6% as investor sentiment tells us that the US are doing something good, which is funny because GDP normally shows that people are spending, but the CPI data was lower, and then all of a sudden we get this. Best thing is the dollar index was sitting at a level of support also just before the data came out. It's like, why is this happening? And we just went up. Buy low, sell high. It says here, consumer spending weakened from the previous period but remained positive. This is exactly what I was referring to. So if you look at the CPI, which is the consumer spending index, which measures what consumers spend on a basket of goods. Now, that was reduced because that is an indicator used by the Federal Reserve and investors to measure inflation, which in turn gives us an indication of how high the Feds are likely to hike the interest rate. There it says consumer spending's weakened, but the GDP came through positive, because the GDP is measured off multiple things. It's not just that one thing that's linked to the next thing, and the next thing you know, you sign up for FBK, you get an investor's account, and they just don't reply to your emails. Next, it says here, a slide in housing out pull down the GDP while boost. Now, I'm not going to go too much in the information because I know a lot of you are here for the technical analysis, but it also says here, now that we've got a positive GDP, there is a high possibility that the Feds are going to give us a 0.25% basis point hike as Mr. Fed Governor Fed Governor Waller is saying that we can expect a 0.25. We've seen worse. We've seen 0.75. So now that we know here, it says here, officials have pointed to a 0.25% interest rate hike. It means that the dollar index are going to be expecting to get a higher interest rate there as well. Also, now let's just jump straight into the technical information. I do expect a bullish move in the dollar index based off the positive GDP that was printed, but again, I want a monthly correction. That is all I want, but we could potentially not see it until a further bearish run. But let's just jump straight into the information. Now, if you go on the weekly, the monthly time frame, firstly, the month is still very long. Then the dollar index is printed above the strong level of the resistance, broken above that. It's back to turn it as support. Now, normally when the market prints such a massive impulse to the downside, you expect a correction to at least 0.382. So you take your Fibonacci from the high to the low of the massive impulse, and this is more or less where we would like to see the dollar index pull back to. Now, remember that the market makes an impulse, a correction, which is also known as investors buying at a low price, and then they take their profit, the price drops lower, and the best is also the other way around. They buy, they sell high, then they take their profit. Whenever you see the market goes down, it's not going down because your favorite Instagram trader said, I knew it was going to be a sell. No, there are people out there who's got more money than what you could possibly think of. Well, they got the kind of money that people post on Instagram that they have. These people, they are the people who take their profit. Then that's when the market corrects itself. These are real-time investors. No, not you. You are the salt on the pizza, and they are the pepperoni that you see there as well. So in the short term, I do expect the dollar index to a slight correction and then a continuation to the downside. Next up on the weekly time frame, what do we have now? From a weekly perspective, a lot of people would say this is a double bottom, which would make sense because I mean we all have like the double bottom. Like you don't have one bottom, because if you do, then you have a problem. Also, we're going to look at the most recent structure, although this is where we want to see the dollar index go to. But the market broke below the strong level of support, and once support gets broken, it becomes exactly resistance. Yeah, on the daily time frame, what do we see? Now, from a daily perspective, we can see over here the market had broken below the strong level of support, and it's now testing it as resistance. Now, this is what I am hoping to happen. Now, the best way to approach this is obviously to wait for clear break above the strong level of resistance, or that would be turn support. Then on the retest, we're going to start looking for a continuation to the upside. In doing so, will the market also print this inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. Next up, we've got the Nasdaq 100 sitting at a very important structural level. And if you remember the last video I made, I said the market was going to break above that, came back, retest. That is exactly what the market had did. Not because I'm a market whisperer, because I'm not, but just because it's simple price action. Also, normally when you see a candle, a buy, normally when you see the market print a candle with such a long wick, you normally expect the next candle to come and fill in that wick. Also, if you go here on the weekly time frame, we can see how the Nasdaq had just reached the previous level of the resistance. The market also printed a massive impulse. So after an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high. Now, if you're sitting there and going like, yeah, but why are you taking it from this low to that high and not that low to that high? Because this is where the impulse started. That's where the first green candle was printed. So that, by definition, is the impulse. Now, we expect the market to pull back to the 0.382. Why? Because if you look left, you'll see that there is a previous level of resistance, got broken, it became support, support got broken, it became resistance, broke above resistance. All of that is now once again support. So I do expect a correction on the Nasdaq before any continuations to the upside. So the Nasdaq is going to have to give up some of that gains that I thought it had for now there as well. Next up, we've got we have gold. Now, gold is due for a correction long ago, and I expect the gold to just correct itself to at least this level. Anything lower than that would be okay to see, but for now we can expect gold to correct itself. Gold broke above the strong level of resistance, and it's currently breaking. below that as support. A clear daily close below this level would make room for a correction and also a head and shoulders pattern, which is considered a bearish pattern from a technical perspective. On the break and the retest, we are definitely going to start looking for selling opportunities for the market to go and test that previous level of resistance that is now acting as support from a weekly perspective. Next up, we have the US 30, aka the Dow Jones. Also similar price action that we got here. And if you go on the weekly time frame, what do we have now? Here we can see something a little bit different, which is very confusing. The market printed this W formation. We had that pullback over there on the daily time frame. I do expect the Dow Jones also, because we have a market now sitting at this level over here, I do expect the Dow Jones also to continue lower. Alternatively, if the Dow Jones do give us a clear break above that, then we could potentially see a continuation to the upside. Next, we have Euro USD that I'm also expecting to correct itself on the weekly time frame back to this previous level of resistance that is now acting as a level of support. And on the daily time frame, what do we have now? From a daily perspective, we're still in bullish territory over here. The market broke above the strong level of resistance. It's back to test it as support. Now the best way to approach this is for the market to break below this level of support, come back, tested it as resistance, and this then continued this move to the downside there as well. In doing so, will the market also print what is known as a head and shoulders pattern? And this is normally considered a bearish pattern from a technical perspective. That is all from my side. Thank you for your time, and as always, cheers for ears.